Thank you, Aditya. Good afternoon, everybody. So we're talking about the role of Web3 and its role in promoting financial inclusion. Now, if you look at the fintech revolution in India, I say the recent issue that we did this fortnight is on how India is poised to be the leader of the supposedly $1 trillion global fintech economy by 2030. And as I said, if the first fintech revolution was led by the payments subsector in the fintech ecosystem, now digital lending is on the rise. So when we are talking about financial inclusion first, I want to understand that of course we'll talk about Web3, but given the strides that we have made in terms of India's fintech economy, where we are at present right now, what are the challenges that still linger on? Mr. Venkateshwaran, if you would like to start.
So I would say that one of the key challenges facing financial inclusion in India, and you alluded to this briefly, is limited access to credit, right? So if we can accelerate lending action in the economy, if we can remove friction from lending, if we can create something equivalent to UPI on the lending side, that is going to spur financial growth and inclusive growth. And when I say lending action, I mean complex lending instruments, right? Agricultural lending or dairy, cattle lending, Kisan credit card based lending and so on, where the lending entities do not have ready access to variables that they need to model risk, to underwrite the loans. So for example, what does it take to underwrite an agricultural loan to a small-time farmer? The answer would be you need things like for the given parcel of land that the borrowing farmer owns, what is the crop type, what is the crop yield, what is the irrigation state, what is the, was there an incident of drought or flood, what is the historical movement of data and so forth. And the access to providers of this data, that is heterogeneous today. So one of the key providers of this data is state governments, but each state government is land record systems that look dissimilar, different data models, different APIs and so on. The providers of satellite data, soil data, e-sign and so on and so forth. So the question is, so the thing is that the digitizing the lending journey is today difficult, right? There's no democratization of lending. So the Reserve Bank of India, and we heard Rajesh earlier, they have envisioned a platform that would offload a lot of this, right? So that the lending entities, the least tech savvy of lending entities should be able to do the most complex of underwriting and increase the loan coverage drastically, reduce the cost of loans, right? Reduce the rate of delinquency and so on and so forth. So that is perhaps going to be one of the key things in financial inclusion.
Right, thank you, Mr. Venkateshwaran. I'll let my panelists from the banking side now take the stage. Mr. Deepak, if you would like to share your thoughts on that.
So I think
it's working.
Yeah, so I think in terms of financial inclusion, today if you look at it, we have fundamental building blocks in place, right? The identity stack, the payment stack, and the data consent architecture stack. These are the three foundational blocks on top of which you can put layer of any financial product, be it micro lending or insurance, crop, agri, access to markets, and obviously with the fourth, which is still little nascent, which is your open networks, largely will create access, be it to market or credit or insurance or weather or information that you require for the last mile delivery. How much of that we have been able to leverage to create products at scale? I think that's where a lot of work is yet to happen, because like we have all seen how the BC revolution changed the last mile of banking correspondent access to financial service beyond what institutions could do through their brick and mortar or digital platforms, or what microfinance institutions have been able to do in terms of access to credit in markets. So I think we'll require a lot more, I would say, of collaborative approach between regulated and unregulated entities to not just foster but fast track this. And due to all the stacks now that is available, the unit cost to make this accessible and available will become a lot more viable than what it was. So pretty optimistic about the way multiple players are going and addressing the problem of Bharat and what we call is not just Bharat, but Ruby, rather rural, urban Indian. So people living in larger cities like Delhi, Mumbai, but not everybody who lives in city is financially included, right? You still have pockets and clusters which needs accessibility. So like when we launched 811, which was a digital bank account of Kotak, we realized that even though the bank in the brick and mortar is targeted at more at mass affluent and affluent customers, but moment you make something like that available digitally where customers choose you rather than you go and look out for customers, probably 60 to 70% of the customers who came in are the customers who couldn't find access to quality banking through a physical infrastructure. So I think a lot of these initiatives, and not just what we did here, but I'm sure Nitin and SBI, Yono, and there are many stories like these that are coming from even all main leading banks to make it accessible thanks to the digital Aadhaar, eKYC stack. And I think that's how we are all building, but it's a journey. It's not going to get done in few years, but we are making visible progress year on year.
Mr. Sharma, thank you so much. Mr. Chuk, your opening thoughts on that?
See, I think when you look at people having a bank account, that problem is solved from an inclusion point of view. So you can argue that people are included at least to the extent of having a bank account. I don't think much in excess of probably 8 to 10 crores people who don't have a bank account in the country right now. So that's a solved problem. So really the inclusion agenda is around credit, insurance, and helping people save and invest for their future. Okay. Now that is where some of the experiments which are taking place. I don't know if Rajesh covered that in his session or not, but the example of KCC being made digital. Okay. We've run a similar pilot on a separate instance, and we are seeing a Kisan credit card, the KCC loan, which is up to 1,60,000 rupees, being done on an end-to-end basis within 10 minutes. Okay. Yes, there is a problem of state records and what we just heard, but those problems are also getting solved. So I think the next wave of inclusion for credit will not only happen by technology playing a role or by intermediaries playing a role, but it is a far larger ecosystem level play. And that ecosystem comprises of the government as a very important stakeholder, the regulator is an equally important stakeholder, the participants, the network participants, and certainly enough the tech providers. Now whether we do it on a distributed technology or we do it on a centralized technology, that is besides the point. The important thing is that I think we are making progress in that direction and meaningfully enough. Yep.
Mr. Chuk, thank you so much. Mr. Chinoy, now I would like to bring as to what the potential of Web3, that's what we are talking about, that's the core issue that we are discussing, be it decentralized finance, blockchain, smart contracts, and when we are talking with financial inclusion there in the picture, how do you see the potential of these applications in promoting financial inclusion?
So actually both Deepak and Nitin both talked about it from a bank perspective. But you talked about banking, right? Everybody is banked, but only 450 million people are with smartphones. And even with the UPI offline kind of a situation, a lot of people are excluded, right? So how do we get those people in? Would a bank or would microfinance institutions be able to address those issues? Probably yes, but not at scale and not at speed. So you need more players to actually come in to this space to enable speed and scale inclusion of these people. The second thing is that, banks and financial institutions have limited access to funds. But there is an abundance of funds in other sectors, which are not necessarily going to be lent through a bank. So how do you facilitate an inclusion of getting people who have excess funds to lend to people who don't have funds through a decentralized system which has low cost, which is secure, and which guarantees return? So this is the second type of innovation, which is going to be outside the banking system. And actually, you referred to it when you talked about this. A second type of innovation could happen. The third type of innovation is something very interesting. And I'd like to give a situation here. We all know the daily sabzi wala, right? Okay, she or he might have a bank account, but they don't have access to funds. And what type of funds do they require? They require funds in the morning to buy vegetables, and they can actually pay back that fund in the evening, and they want funds next day. And even if you charge 0.05% interest for the day, you can do your calculations, what interest rate it happens, So how do you create, I'm just giving you an example, decentralized kind of finance could actually create new financial products here. And the next issue, next opportunity Web3 is that today, there are some shares, and MRF has been in the news lately, 1 lakh rupee share or something like that. It's actually, you can tokenize it. You can tokenize it, and you can actually democratize the whole area of shareholding when we go forward. So there are many different ways of looking at the use case for decentralized finance, not necessarily, in the banking space. It's going to change, and the 811 is a great example. Yono, I was telling them that I'm a personal user of Yono, and I find it very useful and helpful. A lot is happening, but the potential in India to scale is actually 2x or 3x. And if we create the right regulatory framework, and you talked about the regulatory framework and what is happening, we can find a lot more entrepreneurs coming in who can connect liquidity with the need and enable it, and they'll use the existing banking channels. There'll only be a separate entity there.
Thank you, Mr. Chenoy, for elaborating that beautifully, the potential. Mr. Srivastava, if you would like to add, and what's your reading on that?
So let me add, taking two examples, interesting examples, connecting the tech with financial inclusion. So as we know, UPI is, the Indian economy is dependent on UPI. And there are about 450 banks today that are UPI enabled approximately. And for any UPI transaction to flow, there is an interchange, which is NPCI. Right? So in the Web 2 model, if when the number of transactions scale, let's say from 1 billion to 9 billion in a month, or 9 billion to 90 billion a month in a year from now, the size of the data center has to grow in proportion to the growth of the UPI in this example. Right? And my company, Kyndryl, a spin-off of IBM, we are helping NPCI build some of their data centers as well. So this is obviously not a scalable model because if you have to grow your data center 10x, the cost is also 10x, the single point of failure exists. If the centralized system becomes unstable, that is going to impact the financial pyramid and disproportionately affect the bottom echelons of the financial pyramid. Now look at the Web 3 model. In the Web 3 model, these banks, 450 today, they would form a consortium and participate in a blockchain network, right? And each bank would be a peer node in this network. The ledger will be decentralized. So when doing a UPI transaction, instead of APIing into the interchange, which is NPCI, they would create a transaction in their node of the blockchain, and that would get synchronously replicated across the network, which would remove the problems of scalability, stability, and so on and so forth. But not without its problems. This is complex. There's a different set of problems, different set of design points. See, in a distributed, distributed system, you don't get strong consistency. You get what is called eventual consistency, right? So in this blockchain, this model, there would be perhaps out of order messages for UPI, but eventually by the time the clearing happens, the settlement happens, there would be consistency. Or you could have a hybrid model where high value UPI transactions go the Web 2 model and the volume go through Web 3. And another interesting example is FASTag, right? So at any second, there are literally millions of vehicles and packets are waiting in a message queue to the central server for clearance, right? Now if that breaks, if there is a single point of failure, if that is unstable, it affects transportation, it affects the supply chain, it affects the bottom pyramid of the financial pyramid disproportionately. Several other examples like that, the government's, the GEM portal and so forth, where Web 3 technology directly links with financial inclusion. Yeah.
Thank you, Mr. Venkatesh. And Mr. Sharma, what's the banking industry looking at when it comes to the potential of these applications? How they are looking at it?
Like we said, there is, this whole thing has been discussed for a while, and the hype cycle is over. So we all probably last year and a half back or 2 years back, this was at the center stage, and I'm glad it's over. Because then you start to really think of what is the real use case where you can see value, because right now the hype cycle is Gen AI and not Web 3.0, right? So we have moved out of the flavor of the season topic. But I think having said that, there are a set of things that banks have done which has not really scaled up. For example, we had adopted and built something on Metaverse when we launched our 2 digital branches. We called it as our own Konaverse, which is a small corner to build the banking experience, but adoption was not great. Similarly, I think there was a lot of work that happened on the cross-border using Web 3.0, but again, beyond the initial adoption of banks and institutions across a global network, that failed to really replace SWIFT as the way in which global payment networks got established. As we speak now, I think Indian banks have come together and they have set up IBIC, which is the blockchain infrastructure company. Idea is to look at solving problem on the supply chain credit using it. The other one that I think is live with most banks is the central bank digital currency. Early days, but pretty much it brings the core concept of each bank hosting their own node, and then you are trying to create a decentralized model through which the transactions would happen. But again, very, very early days of where we are seeing. I think the other area which is getting built, but it's not necessarily going to move to 3.0, is on your asset registers, especially as the land and property records are getting digitized. A lot of states have already gone and done that. Many states are following that. So especially when you are lending against a collateral, you do know that if this property or this asset is already collateralized or not. So the verification of the underlying assets on which you are doing a lending, that is a use case that looks quite promising. And the one that we have started now to work in a larger manner is to put together a fraud risk management engine and the whole cryptography-based security and authentication stack, which starts to build identity for every single user, depending on what is your pattern and what all network assets that you use for, and thereby build more like an invisible authentication layer, which is personalized to each one. So as I said, there are certain things have not worked, which was the part of initial hype cycle. But now we are seeing the set of use cases which may take a little longer, but then that's working. While obviously there are set of use case people will say on KYC authentication, but those problems are already being solved. Now the question is, why do you want to insert something when that's not a big challenge? But then these are the kind of problems that I just mentioned. I think that's where Web 3.0 has a significant role to play.
Thank you, Mr. Sharma. Mr. Chugh, your thoughts on it? Is the hype over?
No, I think the curiosity phase is over because everybody was curious about what it can do and what it can't do. So most people have dipped their fingers into trying out something or the other, the examples that Deepak gave. But I think the larger realization is, which I mentioned earlier, that these kind of things happen more as an ecosystem. So when a certain technology wave has to replace an existing wave, it happens not because some practitioners decide to unplug their existing Web 2 and replace it with Web 3. It happens as a network, and it is a network level technology that we are talking about. But I think we are moved up from the curiosity phase to more serious experimentation. Yes, it does require a very, very strong consensus building from all the participants. At the same time, nobody wants to be left out also. So it's not like people are saying that come what may, I am not going to be an evangelist for distributed ledger. People are taking it very seriously. I would think on the back of the limited or early success that we are seeing in CBDC, not just in India but across the world, cross-border seems like a very real set of use case which at least in the banking industry is likely to experience. it is certainly not going to solve the problem of financial inclusion. But again, from an inclusion point of view, we know that CBDC is being used for inclusion in several countries. Nigeria is using it very effectively to directly, or DBT equivalent of what we have, to directly fund the wallet accounts of the beneficiaries. But you also need an acceptance system. You need a lot of other enablers which will make that happen. But I think we just need to run at a pace which is more reasonable, because what happens with the tech companies, especially in the startup world, is that we build a very powerful use case, but that use case can sometimes be way ahead of time. And by the time you actually get to that kind of a real situation in the real world, multiple options may have come about. And that is really what has happened in the last 5-6 years of having, experimented or flirted with blockchain, that there have been other alternatives which have also looked like equally viable or better. Now, the other thing, of course, is, which I mentioned from a regulations point of view, that across the world we are in the world of central banks. So central banks by definition are centrally controlled. Okay, so you control the flow of money, you manage the flow of money, and that is how it is required. And especially for an economy like India, those kind of checks and controls are required. We also are aware that the cryptography that is used in DLT is not foolproof anymore. We know that quantum computing has been able to break the most secure RSA encryption in a matter of a few seconds, which otherwise would have taken millions of years. So the question really that people like us are, trying to find an answer to is that, do you want to skip this and go straight into quantum? Are there enough people, first of all, in the world who will take you to that place and help you build at least your security protocols, so that tomorrow, even if you are going as a consortium on DLT, where is the cryptography going to be? Is it going to be as vulnerable as what it has been demonstrated to be? It may not happen at scale, because it's also expensive to break into that cryptography, and not every single fellow can just wake up and decide to go and break into that. But yes, it's possible. And if quantum computers are going to be indeed mainstream in the next 3 to 5 years, like the large tech companies are saying, is this a generation of tech that can actually be skipped, like the way we skipped the paging revolution in India? So those answers are not yet known, and therefore we need to be a little more practical with some of these issues. Usually we find that there is a very strong polarization between people who will say that no, this is a good technology, banks don't want to use it, they don't want to give up the control. On the other hand, you will find banks saying that, listen, I'm dealing with people's money and I am the custodian of their trust, and I cannot give up that oversight on the flow of money. But yes, all of these things have to change at the same time, maybe with a little gap between each other, but around the same time when these changes take place, hopefully enough, we will have a far better acceptance.
Thank you, Mr. Chok. Mr. Chinoy, you seem to have a lot of thoughts as both of them were speaking. What's your take on some of the challenges that probably the industry faces when it comes to the adoption?
So I think, you started off by saying, and I think you mentioned that there's been a kind of a winter here. I think the winter has been caused primarily because of two reasons, and one is the lack of regulatory uncertainty. And therefore, because of the regulatory uncertainty, people have moved to markets where there is regulatory certainty. So if I were to even say, give an example, you talked of Africa and what they're doing there. So in the Indian context, some of the use cases that are globally acceptable, right, are very, very important from their perspective. You get the Nigeria example, and a lot of people are using currency to pay for services and do that because they find it safer. In the Indian context also, there are many, many possible use cases which are there, which will actually emerge once there is some sort of regulatory certainty going forward. And I believe that given what's happening at G20, which is only focusing in a very narrow aspect, and I mentioned this in the earlier panel as well, if you look at banks coming together, if you look at the whole ecosystem, I think we are at a takeoff stage. Every industry, everything goes in a cycle. Chat GPT was the flavor of the month, but actually the largest adoption of 200 million users was Thread. Okay, so depending on what happens here, but there's a quiet revolution happening in this space, and a lot of young entrepreneurs are coming in here, and India has the opportunity to actually make substantial change happen because a lot of the people in this space are Indians, right? And if we create the ecosystem here to solve those problems, I believe that the sector will take off. Yes, like Nitin said, some applications are before their time, but eventually we'll get there.
Thank you, Mr. Chunna. Mr. Sharma, I just want to go back to you. If you would have to list any one big challenge when it comes to adoption, he also mentioned about regulatory changes. If you could list one challenge when it comes to adoption for the banking industry.
I think, as I mentioned earlier, it's about not using technology and find way to fix it or fit it. I think you need to really have a problem that you cannot solve otherwise. So more than even regulation, I would say the conviction to say that yes, this indeed can be solved only through this and there are no alternatives. I think that brings a greater conviction around the technology. And then, like Nitin rightly said, it's about finding a right ecosystem that comes together. This is not something that you can run solo. Right. So I think unless you are able to bring the similar set of belief and conviction with the other stakeholders in the ecosystem to solve a problem at scale, you just can't run faster and expect that you will be able to make it happen.
Taking the example of an ecosystem, today banks can't, the only way banks can reward customers is through interest rate, right? But if you take the whole Web3 ecosystem and you talk about, say, NFTs or tokens, right? Say a bank issues a set of tokens for every entity that you refer to the bank or every transaction you do using digital space, you will get your token, and the more the community grows, the token will appreciate. And without the bank spending any money or without anybody spending the money, the customer who is actually at the center of thing and using the financial system, gets rewarded in a different way. So if you look at the ecosystem to look at it, you can actually create a lot of use cases, right, for enabling people to use. And we want to move away from physical currency. The cost of physical currency is huge. And look at it in a different manner. So there are ways to actually use the whole. Tokenization is another area if you actually talk about it going forward. So that's what I wanted to add to this perspective.
Mr. Chuk, you had to add something?
No, I just wanted to see that at the core of DLT is ownership, right? There is ownership by every single user. Now that also requires a certain level of maturity. And we are aware, in countries like ours, how responsible people are with their own data. Now if we are going to be basically saying that you own and you are responsible for your data, your transactions, your decisions, that level of maturity also has to be achieved, and that is why the whole ecosystem plays much more important than anything else. Now that will require a very different kind of financial literacy. We have struggled for the last 70 years to build financial literacy, as participants and many other stakeholders, to how to make people save money to begin with. Now the last few years we are teaching people as to how to use their apps in a responsible manner, how to not share their passwords, etc. So when it moves to a distributed layer, imagine the amount of literacy that is going to be required.
Right.
So then it should not create a divide between people who understand and know what to do with it and people who don't know how to use a distributed technology, and eventually it will become a much quite bigger problem to, which will not even be addressable.
Right. Thank you, Mr. Cho. Mr. Venkateshwaran, I'd like to start now. All of them mentioned about security, and when we talk about these applications, what's the balance of when it comes to security, privacy, given now that we're dealing with or talking about such secure financial data?
So great question. So let me first touch on transparency and then go to privacy and security. See, central systems are not transparent, right? So centralized systems are an anti-pattern to transparency because power is concentrated on one system, decision making is concentrated around a few. So that is the Web 2 model. If you take the social media equivalent, you know, the big tech have complete control on user data, even sensitive private information. Now in Web 3, the heart of the concept is called trustless. And what trustless means is that because of the decentralized nature of the technology, you don't need a third party, you don't need a central authority to trust. So it shines through, the transparency in Web 3 shines through compared to Web 2. But what is the trade-off? Trade-off is that if there is no central system, there is also no central oversight on the authenticity of information. So there is a trade-off there. Now coming to privacy from transparency, that is clearly an area where Web3 has benefits, because with Web3 technology, you can granularly expose as a user. Yeah? You can selectively, granularly expose parts of the data that you want others to see. So as a creator of data, how much of the data, when, under what circumstances, and who should see that can be controlled. And in this case, the trade-off is that, well, the argument at least is that if taken beyond a point, the amount of user data in the system would fall below a threshold where personalized insights are not possible, is the argument there. Now coming to security, and this is important, right? So the Web 3 points of vulnerability, Web 3 being a distributed system, are very different from the Web 2 points of vulnerability, right? So for example, you all talked about the cross-border payments and how that can be seamless with blockchain. So part of that is facilitated through smart contracts, which automates some of this process. Now there are new areas of vulnerabilities. There is a security issue called smart contract logic hacks, where malicious scripts are injected into the smart contract, and then the behavior changes. So now in blockchain in general, if you write a block, it's incredibly difficult to erase that block, and hence the blocks are called immutable. Right? But there are these trade-offs as well. Cryptojacking is another new security issue that Web 2 did not have. So in summary, Web 3 from a security, transparency, privacy perspective brings a lot of power, but there are also trade-offs, and then that has to be carefully handled to find realistic problems, right? There has to be new ideas on the table. So.
Thank you, Mr. Venkateshwaran. Mr. Sharma, you would like to add something?
No, I think, see, challenges, as I said, always there will be challenges. Okay, that is not a starting point, as I was saying. I think finally it's more important is what is that unique outcome that you get out of. And that's why I mentioned some of the use cases which I think is definitely prime for, on security, cross-border, asset tokenization, including the fractional ownerships. And not just fractional ownership from shares, fractional ownership of real estate. Because a lot of assets can actually get demat with a fractional ownership, because finally wherever trust is a question mark, right, and transparency is a challenge. I think those are the areas in my mind are more prime for, and it's not necessarily around financial service. Financial service obviously will have a role to play, because when there are assets movement happen, there is also money movement is going to happen. So I think when, again, bringing back to my first statement, I said, see, what do you do on the identity? Can identity be decentralized? I can authenticate a document. I can establish identity, be it for land, property, registration, whatever kind of legal, if it's judiciary. I think so when you start looking at the application of this, application is pretty wide. So identity, documents, transaction, and then obviously when you look at each of these, there is underlying role of a financial institution that comes in. But here the starting point is not financial institution. That's the point I was making, that one has to look at this in the larger ecosystem space. Obviously, there are some use cases are financial service centric like CBDC and all that we spoke about. But in a lot of other cases, the flow of information, the flow of goods, the flow of identity, and the flow of money, all that gets embedded into a single integrated system. And that's how I think we need to imagine about this.
Thank you, Mr. Sharma. Mr. Chugh, your take on the trade-offs when it comes to security, privacy, and while dealing with Web3 applications?
Don't think we've tested so much that we know exactly what the issues are. It's only what we get to see and hear. But I think we were sitting through the jury presentations the other day, and Mr. Chenoy was also there. I mean, the number of non-financial services companies using Web3 is amazing. So I think this fixation with DeFi is good, but DeFi probably is going to be one of the last frontiers to go through, primarily for the fact that there is going to be, there is the whole trustless, permissionless sort of an architecture requires a very, very strong consensus in the ecosystem, and that happens over a period of time. And when a technology like this is tested across other industries, other use cases, I think financial services will only be very open to look at it. But yes, at the moment, we are far more concerned about the user level issues more than the inherent security issues, because I think they are as good or as bad as a centralized technology right now. Yes, you can argue that they are more secure. You can argue that there is anonymity. You can argue that there is transparency. But to a great extent, even that is offered by the centralized technology, largely driven by regulations. So today, regulations make banks and other intermediaries disclose pretty much everything. If you look at the last year's digital lending guidelines, there is nothing that you can't disclose. There is, even if you deal with a service provider as a lender, you have to disclose the name of that person also. If you deal with a collection agent, a potential collection agent, if the account has to go bad, you have to tell that upfront to the customer as part of the key fact statement. So I think disclosures are improving, so I don't think it's a problem of transparency anymore. Yes, you can argue that how do you price, right? But when it's a federated, distributed structure, that question is not going to get solved either, that how are you pricing for it? Right. Finally, you're letting the network decide a level. Today, the market is deciding that level. So I don't think anybody is outpricing themselves, because it is all market-led and market-driven. But yes, security is in equal amount of concern as it is today.
Thank you, Mr. Chugh. Mr. Chenoy, your closing thoughts on it, and then we'll open the floor to the audience for some questions.
So I think we are kind of at this phase in decentralized finance as we were in the early days of the share market or early days of the mutual fund market, where there was a concerted effort to educate customers, right? And I think, as far as adoption and all goes, there's a huge need to actually educate the customers. And you talked about the need for financial literacy, right? So that's one. The second is that, there's a kind of an underlying fear that this Web3 technology is difficult to use, and you require wallets, and you require, very specialized ways. So, they've developed an app which is very simple to use. So how do the technology providers actually create products in this space which are very easy to use and which are secure, which are traceable, which are trustworthy, all three words that you use. So once we create that simple to use, secure, easy to use, trustworthy things, and develop new products and new financial instruments taking advantage of this decentralized technology, then you'll see a kind of a hockey stick approach going up here, and a lot of the centralized systems will not feel threatened. The challenge comes is when, let's say, a centralized system feels threatened by the existing system, and then therefore wants to bring in regulation to prevent new entrants from coming in. So one of the biggest challenges and one of the biggest use case applications is remittances. But one of the biggest propagators of remittances is the International Settlement Exchange. Now they are dead against this. So, it is for countries and all of us to actually balance these two things and enable the ecosystem to progress so that we reduce the cost of transaction, reduce the cost of finance, and increase inclusion.
Thanks to maybe add
Yes.
a point. So to add to what you just said, I think a lot of the Web3 technologies will be invisible and only the experience will be visible. Taking an example, Starbucks recently included NFTs in their loyalty program, and you mentioned that as well. And they said they are going to intentionally obscure the technology that is going to underpin the experience so that they don't, scare customers away. And today it's a settled fact that ease of use of a product is as important, if not more important, than the feature set or capabilities of the product in question. So perhaps that's what's going to happen with Web3 as well.
That may come up in the NFT session,
yeah.
but really, loyalty programs and other programs today are not fungible. But using decentralized financial applications, you can actually make them fungible. And you can actually create value in the hands of the customer. Right. I keep coming back to the thing that the Web3 ecosystem can create value in the hands of the customer for utilizing the platform, for utilizing the system and creating it. And therefore, the underlying value of the token behind that increases, etc. and all that.
Thank you, Mr. Chinoy. Thank you, all the panelists. I'll open the floor to the audience if they have questions. Yeah, I can see some hands.
First of all, many thanks for this kind of a discussion, given that decentralized finance have always seen de facto the bankers as the core villains. And now to see such an instant villain of great bankers coming in together and having very deep perspectives with respect to adoption of new technologies itself is a real delight to have. I especially loved the point of Mr. Sharma about fractionalized ownership of real estate being one of those best use cases. And in the between, Mr. Shinoy was mentioning about more financial inclusivity. Now, we often see this kind of affair that these small players, MSMEs, when they want to raise finance, at times there's a shyness, natural shyness to get into a lending mode. And that's where they use these kind of a new age technologies, which are fundamentally based on crowdfunding, that we increase the total number of equity holders, who ultimately end up becoming the fractional owners of whatever asset which we are trying to build up, and make a whole community as a whole as a owner of that particular asset. That's where there are these fundamentals of financial inclusion of decentralized finance are completely coming on. But the moment such kind of an attempts are made, we see this regime that, for example, in fractional ownership of real estate itself, SEBI very recently launched an MSM REIT policy that if you are a fractional ownership platform of real estate, you better be registered under an MSM REIT, where then your net worth should be at least 25 crores. So many people should be already a part of it with so much experience. Everything which was about enabling that very poor fellow who otherwise didn't have much of a resources and who wanted to use these Web3 resources. Now all of that becomes disadvantage because of the regulation. And this is exactly the kind of a scuffle between the centralized and the decentralized finance, which we keep on often hearing. And I just wanted a bit of a elaborate views on this aspect from the panel.
No, I think what you said is absolutely right. I think some of us did speak about one of the things, whenever you start this, some bad actors can create havoc, right? This comes from the fear of, while you want to create more like a self-regulatory framework, but then how do you ensure that you have trusted partners who are orchestrating and are part of this? And I think there's no easy answer. So I think you spoke really well about it, but some of us did talk about the trust and where regulators still are not very comfortable, or government. And we have seen this happen today, be it like on NFT or on crypto. There is a fair amount of, I would say, a gray area that continues. So the question is, when you go all out, unless there is a policy framework which protects both the investors, like even in fractional ownership, or a P2P lending, whatever you build, right? Finally, there are investors and there is money that has to flow. How do you ensure that there are no rogue actors in the play? I think unless that question is answered properly, these will continue.
So I think you've made a very valid point, and we need to educate the regulators, saying that there could be a 10 lakh house which we can actually do fractional ownership. And I think it's good that you've raised this point and some work for BWA to do. I think here we need to educate a lot of the regulators on what does it mean. Decentralized finance means smaller ticket size. And how do we say that, okay, look at smaller ticket size, but yet regulate it, and whatever needs to be done. And again, you can use a smart contract to regulate such sector. You don't need physical way to do it. So use the Web3 tools to create a regulatory framework and a monitoring framework and reduce the ticket size.
Thank you, Mr. Chinoy.
I have a question. So like as institutional investors, I see both public and private people here. So there was an article dated 8th day of April 2018, the Maya of Bitcoin, where Arjun Jaitley ji was also mentioned about the framework. So there was a launch of RBI about Lakshmi coin, right? The launch was to be done by Government of India, but today the actors Zion they have launched the Lakshmi coin. So will in PPP partnership, will the government take over that Zion in near future, or how does it work? Or anybody or anyone can just file a trademark when the government launches anything, the private player just file a trademark and they launch their verses. So how are you going to tackle this situation? Because Lakshmi coin was launched by Government of India, not a private player. Thank you.
So you're raising a broader issue about identity in the metaverse, and legal aspects on the metaverse, right? And I think, I'm just saying digital space and metaverse, right? So, So there's another case if you look at Amazon and Apni Dukan, right? So then what happens in the digital space, right? Using identity, using trademarks, using platforms is something in which there is an established regulatory framework, right? And if you look at the recent High Court judgment in terms of the NFTs for players, right? They ruled that. So I think the digital ecosystem legal framework is evolving, and I think till we have many precedents of. I get your point.
I think when State Bank of India is here, so my request to the head is the government should intervene and look into that landscape. No third person can just file a trademark and say, hey, we have the Lakshmi coin with us, invest in us. Kindly look at the stakeholders of Zion first. I would love to see that. Thank you.
I think it's a legal issue. It has to be taken up in court. So,
Thank you so much, panelists. Thank you, audience. We'll now break for lunch. Panelists, let's have a photograph, please. Thank you so much.